of automated trading, EMA crossover. Myself, Vaibhav, in today's session of EMA crossover, we will be continuing to work with the EMA. For last couple of sessions, we have worked with EMA in conjunction with other technical indicators. But in today's session, we will particularly focus on the EMA, and for today's session, we will try to employ another tactic called EMA crossover, where we employ one EMA of shorter duration in along with the other EMA of a relatively larger duration, and we try to see if we can make trades using this crossover technique. I hope you are now well familiar with the EMA. It is simply the exponential moving average, where we provide the more weightage to the recent prices, the recent moving average of the underlying instrument. Before we get started, this is the standard disclaimer, and I would like to remind you that whatever algorithms which we will be developing during the sessions are simply for tutorial purpose, and no claim is being made regarding the profitability or otherwise of any algorithms developed here. And even if you want to use any of the algorithms or the technique underpinning the algorithm, I would recommend that you do extensive trial runs and also sufficient mock runs on the demo account. So let's get started. EMA crossover is pretty much a simple technique. So what we will do, we will continue to work with these EMA 10 and EMA 20, and I would like to remind you of the last few trading sessions where we used to simply go for a long trade if the EMA 10 is above the EMA 20. So whenever other parameters along with these EMA conditions were fulfilled, we were looking for a buy trade, and the sell trade was to happen when the EMA 10 is below the EMA 20. Now what we do, as you can observe on the charts, that I feel that the probability is highest when we go for any trade during the initial phase of the crossover. Now that here you can see that it's been just 3 to 4 hours since this crossover happened, and naturally the probability is high that if we go for a short trade anywhere closer to this EMA confluence area of around 1.140, we will stand a better chance of ending up in profit. Of course, there is nothing certain, so we can even end up in loss, but we can optimize our trading position to cut down on the losses. So the underlying message is that when the crossover happens, as such, here you can notice that this crossover happened from bearish to bullish, and then from there on it has rallied substantially higher. So if we were to target the trading entry anywhere here in the initial hours of this crossover, we would have made decent money. And here, even if we had gone for the sell trade after the crossover happened, maybe we would not have made much money, or if we had employed the trailing setup, then I think we would have been stopped out maybe on equal scenario, not much loss, not much gain, or maybe bit of losses. So here this crossover I think happens, but then the price immediately reverts back and starts to rise. So here the EMA crossover has been not much useful, so we have to factor in such circumstances also. But as you can see here, the probability of ending up in profit was particularly high, but not much here. We would have naturally ended up in loss, and here also loss only, here maybe profit. So sometimes you are making profit, sometimes you are making losses, but if we employ the optimum risk reward ratio and cut down on losses, and considering the fact that sometimes the trend is running for a very large amount of time, and sometimes it is reverting in just couple of hours, so things can work both ways. But we can utilize these EMA crossovers when the EMA 10 crosses above EMA 20. We can look for a buy trade. When the EMA 10 crosses below EMA 20, we can look for a sell trade. And to cut down on volatility, as you can notice that on this hourly chart, the volatility is pretty high. Here you can see that this EMA crossover structure is happening multiple times and pretty much randomly. The up move and then in the down move again, up move again, down move again, up move, and then it is finally continuing for a while. And briefly here again it enters into bearish territory just to revert back after a short while. So the underlying momentum also becomes much important in such circumstances. Here also you can notice that now after rallying for more than 3 to 4 days, the Euro USD is kind of entering into a correction to consolidation phase. So now that EMA has crossed over in the bearish territory. So what I feel that we should only look for a buy trade when the EMA crossover is in the bullish phase, when the EMA 10 is above EMA 20, but just during the first 10 hours or 9 hours of the trade setup. So whatever algorithm will do, it will try to basically go short during these early hours. So suppose this crossover is happening around 9 GMT, so the order validity will be for next 10 hours. So till 19 GMT, the algorithm will be in position to look for trading opportunities, and after that, it will not be doing anything. It will simply uh, relax and sit back. And again, when this crossover happens, it will again start looking for selling opportunity. Similarly, here also, only during the first 10 hours, it will look for short sale opportunity, and then it will give up on its mandate. So that what it does is that you get a trade only during the trend change, in the initial trend change, and if we are going to stop say after 9 or 10 hours, then that trend might continue for any amount of time. But even when it will be coming back, even when it will be reversing, we won't be looking for any fresh trading opportunity. So here, after due consolidation, when the price started to move back, our algorithm would not have looked for any buying opportunity. But to cut the clutter and to make sure that a longer time frame underlying momentum is also taken into account, we can add one more layer of the EMA crossover, and we can also bring in the 4 hourly time frame. So we do it in two layers, one for the 4 hours and one for 1 hour duration. So here you can notice that till 21st of February, the momentum was in the bearish phase, and then it shifted to the bullish phase, and now it is ongoing for last almost 2 weeks. And even prior to that, here you can notice that the trajectory was bearish, then it converted to bullish, and again around 5th of February, the bearish momentum set in. So similar thing is happening on multiple occasions. So keeping these in mind, we will employ two layers of the EMA crossover. So let's get to the JForex platform, Visual JForex platform. We will need to make a new file, as we are starting from the scratch for today's session. We name it as 10th March, March 10th, March 10th. First of all, we will need to do the instrument subscription, and this time we will work with on candle. So let's bring in the if block and one for position amount, which we usually keep at 0. You can also allow the algorithm to execute multiple trades, but I don't think that's a bright idea. considering the fact that if we are going for multiple trades in similar direction, it's just like increasing the lot size, and that increases our risk. We will look for the default instrument. We will bring in the default instrument here, and the default instrument is of euro USD. We will let it remain as it is, and we go on candle, and we bring in the last bit candle instrument, and here also we bring in the candle instrument, and then we use euro USD. Euro USD is on the lower side. I hope this time around we will be able to find it early. Last time around it was pretty frustrating. Now we want the default instrument to be equal to the last candle's instrument, last bit candle's instrument, and that last bit candle's instrument should be equal to euro USD. So we have done this, and now we will do the position position info. Position info, we will use all position amount, and it should be 0. That means no market open or no pending open order is there. We make it 0, and now we can start building our indicator blocks. We will bring in the components of indicator, and ours is MA, moving average, and we are going to use EMA. We will need EMA, the 4 EMA, I think the 2 EMA blocks should be good enough. Let me check. We are going to need EMA 10 and EMA 20, and then we will need 4 EMAs, as we will also need to check for EMA values 10 periods back. That means we will need to use shift and 4 EMA blocks, position amount equal to 0. Now the default instrument is euro USD. The time frame is going to be of 1 hour. And here the time period is going to be 10. EMA and EMA 13. Okay, so far so good. Hourly, and this one. Okay, now we need further 3 EMA blocks. Here also change will be made to make it hourly. And let me check the values. The bid, close price, okay, it's okay, and we make it to the 20. We bring in another 2 if blocks this time around for shift 10. Default instrument 10 minutes, hourly, and here we will employ the shift 10. That means 10 candles 10 hours back. Time period is going to be of 10 minutes. Again one more EMA, progressing slowly, slowly. And shape 10, the time period will be of 20, EMA 16. Okay, so this is the hourly setup. As I said while explaining on the 4 hourly chart, we also need to add the 4 hourly layering to avoid too much of an volatility and too frequent changes in the EMA structure, EMA crossover. So we bring in 2 more EMA blocks, and this one default instrument remains the same. The time period will be changed to 4 hours. Shift will be 0. Time period will be 10. And here I think I overlooked it. It's kind of error of omission. The time period should be 4 hours. And one more. And here the time frame should be 4 hours. Instrument is same. The period is going to be of 4 hours. Shift will remain 0 and the time period becomes of 20 hours. Okay, so far so good. We have added 2 layers of EM block, and now the question remains is these are backbone conditions. Now the other question will emerge: when to go for a buy and when to go for a sell. So what should be the immediate price action? And since we are not employing any indicator at the time being, for the time being, we will need to make sure that our entry point and the exit point is well defined so that our risk remains low. So let's look on the chart only. Here you can notice that it's also kind of bit profitable if we see that the prices are rebounding after getting inside this EMA band and closer to this EMA 20. So one way is that we define that last candle, not last candle, the candle before the last candle, so it's like penultimate candle, should have been in red. That means that there was some correction phase and the price came closer to the EMA levels, and then the last candle, that is just immediate candle after the candle closed in red, should be in green. That means that prices are finding some support closer to the EMA level, and that is what our purpose is. So we can also do it like this. We bring in 2 historical candle blocks, one with the shift 1 and another with the shift 2, and then we compare the candle close in what kind of circumstances. The candle close, if the selling pressure was there, the candle will be red. If the buying momentum was there, the candle will be green. So we can employ this tactic as well. Now let's add the historical candle. we will need the components info, and here we will need to take two historical candles, and then we will try to see the build structure. Here the default instrument remains Euro USD, but the default time frame we will change it to 1 hour, and we will consider the penultimate hour, and the last hour we change it to 1 hour hourly. Here also again we need to change it to 1 hour, and as I said, there is no immediate need for going back in time during the EMA 4 hours. So here the shift was 0, but for the historical candles we need to go back in time 1 hour and then 2 hours. So we will need to employ the shift here, and to differentiate we will name one as shift 1 and the candle 20 as shift 2. So let's make the changes. Shift 1, and here shift 2. So now we will be comparing that last candle close should have been in a buy side for a long trade, and should have closed in red for a sell trade, and this should be good enough. And with that we will also try to employ the pending open technique so that our orders can be executed at the optimum price. So let's see how things will shape up on hourly time frame here. So the underlying momentum on the 4 hour should be long for should be bullish for a long trade, and the underlying momentum should be in the bearish phase for a short sale. And sometimes on the 4 hourly chart also we see rapid moves in both the direction, and in times like those it might be get very difficult to trade, but to avoid the turbulence here the solution is simple: to adopt algorithmic trading. Now coming back to the hourly chart, we have to look for a sell trade here in today's session. First we will need that the penultimate candle, that is the candle with shift period 2, was in a rise. That means it should have been closed with a close higher than the open price, and it should have made a high above this 10 EMA or maybe 20 EMA. So again, to determine the conditions, we take a look on the chart. Here this time around the EMA 20 is not touched, and this correction happens, and then immediately the price rebounds and continue to go higher. Similarly here the rebound happens, and then again the other condition is also fulfilled of the last candle being in the sell territory, that is in the bearish phase for the sell trade to happen. So if the candle close is in the green and above the EM crossover, that is the bullish crossover where the EMA 10 is above EMA 20, We will look for a buy trade, and if the candle closes in red and if there is a opportunity, we will continue to look for a short sale. So we will need here, I think we will also need to employ the min max conditions, or maybe we can also utilize the highest or the lowest price point of the very candle which we are going to work with. So I think even the low of the candle, historical candle with shift 2 should be good enough, and we can say that it should have closed the low of the candle, that candle should be below the EMA 10, and then immediate candle, that is candle 1 period back, should have closed in green with price closing being happening above the 10 EMA level. So in such circumstances, we will be trying to go for a long trade when the price momentum is also shifting on the lower time frame from being in the bearish territory to being in the bullish territory. So I think we can do this kind of things as well. So let's get back to the charting, and here we will need to bring in the E blocks now, and we are going to do some calculations as well. But first, let me take a look on what we will need next. We will need to make sure that we will now need to bring in the market open conditions block, and that means we I think this time around we should try to work with pending open only. For last session we had done the market open, so instead of market open we will employ the pending open this time, and we will do the necessary calculation later on. So that's okay. Now let's bring in the multiple action block, and I think multiple action should be found in logical terms. So here is the multiple action block, and this time around we leave some space because we are likely to need to do a lot of calculations as well. So the multiple blockchain has been brought in, and let's start to add the mathematical component, as we will need to make sure that last tick is above the EMA 10 or the EMA 20, and also we will need to do some calculations for determining the entry and exit points for our algorithm, so that the pricing is optimum. Now in this calculation expression block, we will compare the candle close, last candle close. Suppose if the last candle close has happened above this EMA 10, only then it will look for a buy trade. So we can do, and we will need to bring in the if blocks. And also one thing is that to make sure that price is being placed closer to the EMA levels, we can also make sure that we do some calculation, and we try to make sure that last candle close is within the desired range of the EMA 10, and for such scenario we will need to do calculation as well, where we will need to deduct the EMS value from the candle close, and I think let's see what price it is, 1.120, and the EMA is of 1.1178. So given the volatility, this time around we had a lot of volatility for past couple of weeks, but we will not really keep such a big condition. Maybe 10-15 pips should be good enough, so we will cap the price of last candle close around 15 pips from the EMA. So we bring in the last candle close value, and from that we will need to subtract the default variables, auto created variables, and let me see the shift 1, the candle 19th close. Here is candle 19th close, and now we will need to deduct the EMA 10 from candle 19 and then define the desired pips. Again, for that we will need an additional calculation expression block, and this is the current EMA 13. Here you can notice that it is hourly, shift is 0 means current EMA, and the time period is of 10 means the 10 EMA. We now deduct. So the candle 19 minus EMA 13, we will get the difference, how far the candle has closed from the moving average price, exponential moving average price, and then we will define 15 pips, and we'll try to make sure that this difference is less than 15 pips. So A1 minus A2, and the difference of the result, we can call it as ED, and we now bring in additional if block, calculation expression block, to make sure that the candle close is within the desired range. For that we will need to do further calculation, and this time around we do it with the help of default instrument pip size to be multiplied by 15. So where is the default variables? The default variable is here, default instrument pip size, and we will need to create a new variable. We will name it as ED1, and now let's give the ED1 a value of 15 pips. Save. I hope it has been saved properly. Let's see. Yes, it has been. Now we bring in the ED1 and we multiply the default instrument pip size into ED1 A1 into A2, and the answer will be the maximum distance allowed MDA, which is going to be 15 pips. So far so good. For the time being, let's connect this here. So let me recap what we have done so far. Here we have defined 15 pips with the help of this newly created variable and the instrument pip size, default size, and we have multiplied it to create a condition of minimum difference, and that is of 15 pips, and this is the last candle close difference from the EMA, and we are going to take this answer and compare it to our minimum requirement, and suppose it is ED is less than MDA, then only the trading will go ahead as anticipated. And these are our historical candles to check if there was some correction, and after that correction the price should be rebounding with the help of support coming in around the EMA levels. These are 4-hourly EMAs, and here also the purpose is same, that the 10 EMA on 4-hourly time frame should be above 20 20 EMA on 4 hourly time frame for a buy trade, and of course vice versa for the sell trade. And here we have tried to define the EMA conditions, and they should be valid only for initial 10 hours. That's why we have brought in ship 10 values. So with this, I think now that we are running short on time, we will need to wrap up the session. But we will continue with these developments tomorrow also, and we will try to see how to make sure that when the prior candle has closed in red, and after making a low below this 10 EMA, then in the next hour it rebounded, and that means that it is indeed getting some support. And instead of going for a straight away open net market at the high prices, we try to place the order as close to the EMA levels as possible, and for that we will bring in the pending open and do the necessary calculation. And also for further optimization we can even utilize other indicators as well, so we will also take a look on that, but in tomorrow's session. Have an excellent time ahead, and see you tomorrow. Goodbye.